This is Greg for Teslafaninsight. Thanks once again for joining us. Today is our trade blast for May 15, 2020. Our topic for today is something I call secret market drivers. And we'll take a look at it as it relates to today's activity and then kind of go from there. So one of the things we did yesterday is that we actually have a viewer who enjoys our show, and he spends a lot of time doing what's called charting. So there are all these different charts you can look at to anticipate what the market's going to do, what a stock is going to do. There are things called the 200-day moving average. There's a number of really interesting things that one can use as a way to sort of gather a sense for where the market is and where it's going, and where a stock is going, et cetera. One of the things that we've strived for on our channel is to kind of figure out stuff that's somewhat obvious to everyone, particularly if you've been investing and trading for a long time. But, you sort of look at that thing and see, so how can we refine that down to something that you can rely upon in terms of decision making? I really need to, in the first few minutes, get through what we expect today and then kind of go from there. As is always the case, we're around $800 a share. Based on the pinning process, one could argue that the goal is to create a whole bunch of losers on the call side based on there being more calls than puts, for example, on Tesla. And if you look right at 800, the ratios are not huge difference. I actually saw on Yahoo that it was about 5,000 to 5,000 in terms of the number of puts and calls at 800. I'm told by somebody else that they saw 5,000 calls and 3,500 puts as the number, but that's a relatively close, even if it was that was the number, that's a relatively close number between your positive and negative or puts and calls that might drive ratios one way or the other. A new idea I wanted to introduce today that I sort of came up with was what I call the bull theory. And there's a famous joke where a young bull says, let's run down there and enjoy relations with a cow. And the old bull makes the comment, let's walk down and enjoy relations with all of them. And so I kind of bring this up because what's interesting is that you have a situation where, yes, there's how many puts and calls are there right on that number. Another general question, though, is that, is it possible that you could say, hey, we want the 800 or the big number because it has large numbers of puts and calls. But if we could take this stock to one side or the other dramatically, maybe 10, 15, 25 points, you actually start collecting even more, if you will. If it's a put-heavy market, you might push it towards the call side or vice versa. So I just wanted to introduce the general theme of I've been laser focused on what's the current number that the stock price is very close to, particularly if it's a 0, 0, 800, 700, 600. And then the next question then is, okay, if we were to create a general trend, we might be able to go 805, 810, 815, 820. How are the ratios on all those other options? And might be their incentive to even drive that price further in one direction or the other, therefore capturing sort of more billets or more scalps in the process. And so I wanted to kind of introduce this because it expands the idea of using ratios to determine how the pin day might work on a Friday. And so I wanted to introduce that to you and encourage you to keep an eye out for these data as well. We keep taking steps as an organization in terms of new things that we tend to do. And, we haven't been extremely data-driven as an entity, but I do want to get a survey question from you, which is, would you like to see data pushing beyond, maybe pushing 50 points above and 50 points below. And let's follow that data over a period of time to determine how we can leverage that data to influence how we're trading, particularly on Fridays. We have a viewer that's based in the New York area, and he's done very well selling puts against, selling puts and pulling in cash by taking the market maker side of the trades that emerge through the process that we've described. And I think that's really smart to do that, and it might be something for you to consider for profit as well. Again, you can drop me a note if you really want to understand more about this. We can help walk you through it so it can add some dollars to your trading process. The second half of what I wanted to do today is that you'll notice that we tend not to be like a heavy chart-driven site. So we do general stories about Tesla, we do general stories on investing and Tesla, and occasionally we'll try to get down in the weeds and dive into statistics like, what are the ratios that we're looking at 800, and how do you manage your money relative to how those ratios are looking, especially if you're trading into the end of the week like this. And so what I was sort of intrigued by was that we posted yesterday some chart-driven data, and I was impressed at how the negativity of that analysis came true, perhaps on the first half of the day, but the second half of the day, the whole thing kind of turned around and became something different, and Tesla's stock price went up from a low of 765 or whatever it was, all the way up to 803 heading north. And so I thought this was really interesting because one of our trade group had said, hey, Tesla's down this morning. This was yesterday morning. I'm expecting it, given that it's down 17, 20 bucks pre-market, the trend should be your friend, where if it's down 17 in pre-market, we should expect it to hit 750 tomorrow, because it's kind of a follow-through of what we've been seeing going on. And so I thought about it, and I was like, I can't argue with the analysis that he just shared. 750 sounds good. I had some puts sitting in that region that would have done well from that. And so I was sort of riding that train and sort of saying, it's probably going to be down today based on a lot of variables and how Tesla tends to go in one direction and stay in that direction for the entire day. Hence, yesterday was a bit of a surprise. The other thing that's kind of lurking here, and I would agree, is I did have one of our investor traders and Patreon supporters talk about the 3-day rule hitting relative to the factory opening and how all this works. And I'd have to say I really agree with him. I kind of feel like the analysts really haven't done, one of the ways you can tell the 3-day rule is really hitting is when you have this situation where all of a sudden analysts have been quiet and then they all start making forecasts that indicate, hey, stock's going to do great or something of that ilk. So all of a sudden you're like, oh, it's a vortex of updraft. It feels to me, relative to the 3-day rule, that we really get into it starting Monday, Tuesday-ish, because we'll know by then, can Tesla get back to full bore production, after a week of warm-up at lower numbers that they're doing now? Do they have enough people that haven't quit because they're getting unemployment checks, et cetera, and how does that all play out? By the way, we did bring up the fact that there are people that might choose to simply take big unemployment checks and not go back to work. But the problem is if people are offering you work and you don't accept that work because you're enjoying the unemployment, you can actually lose your benefits from that. And so I don't know if there's a way for them to check that, but Tesla did bring that up, that those benefits could disappear if you're not actively embracing work that you're being offered. So in general, I feel that between Battery Day and what's happening with the plant reopening, there isn't a lot of numbers that have to be rethought out by analysts. And this kind of brings up an interesting situation that is an overarching. And so it's great when you make money on options in very short term, but it's amazing to me how many people don't make the quick dollars because they own the stock or they own long-term options, but they get it on the long theme. And so it's almost like you have these waves going off on like that, and you can make or lose money in the short term, but it turns out the longer term is actually winning. So, I, one of the themes that I'm sort of developing other shows, and one of the themes I thought was really interesting is that there are a number of ideas that were shared about Tesla that were thought to be a bad deal for different reasons, and that Tesla might die from. So one of them that really is in the back of my mind is the whole idea of dealerships or no, and then how does that affect things? So they had a problem with parts, and they've obviously solved that now, and so it does still take longer than it does other places to get the parts figured out, but Tesla did figure out that problem. So what I wanted to introduce is just the idea that, think about it, it was a bad idea for Tesla not to have dealerships, and it's created other issues. But on the flip side of that, because Tesla's cars are ordered and people are putting down $2,500 deposits as much as 3 years in advance, you have a situation where they've got control of their supply chain that other people don't, because they don't have a reliable way to determine how many vehicles to produce and deliver. And so in the pandemic zone, with people's ability to just order off their phone, their vehicle, have it delivered to their homes, that's sort of emerging as the new future of the auto business, with all kinds of entities like Carvana and all these other entities that are out there. And so it's interesting to watch Tesla sort of seem at a disadvantage without dealers in some ways. All of a sudden coronavirus hits, and now you have a situation where the manufacturers don't have people walking through dealerships that are abundant. But Tesla, on the other hand, has all their numbers right in front of them. And as we may recall from the last earnings announcement, the CFO was pointing out that their order book is stronger than ever right now. And I would say that's great. It's that case. I think it may be a little bit softer than he anticipated, because they do have the orders, but there are people that may not lose their jobs that might influence, how that conversation works out. So I kind of wanted to bring this up because there's a weird thing that I see happening as I look at stocks right now, which is watch Shopify and its stock. As things go down in this, they'll be back down, 5-10 points, and as soon as things spring back, they're up 20 points. So it just seems to me that there are winners and losers that are being defined in this environment. And you can kind of see it in their stock price and the willingness of folks to try to buy into those companies as they have a good command of their business models, and that those business models are a good fit for where we are with the virus and how changes will be made going forward. So I'm kind of intrigued because there's this like gorilla in the room, which is the whole market going to crash, take everything with it? And it kind of seems kind of logical, but the problem that I'm seeing with that is that what if there are companies that are getting killed, JCPenney, Ford, and their stock price reflects that, and their low stock prices don't affect how well other companies are doing, like Amazon or Apple or Tesla in this case. And so what I'm intrigued to watch is people sort of starting to come around to the fact that, yes, things are bad. There's no happiness in this virus issue. But on the other hand, there's certain people whose business models are devastatingly effective in this period. So we actually have a show coming up that I think is kind of interesting. We'll shoot it today, and it'll air today or tomorrow. And the whole idea is that there's this phenomenon of managing by physics. So Elon, when I first heard it, I thought it was the first principles of physics that he was talking about, which he was. And I kind of looked it up, and then I rewatched the video. It's actually a pitch day for the Air Force that he did, and he was talking about his management style and how he uses the first principles in management and how physics impacts his management style and what Tesla and all of the other companies he works with does. And so I was kind of intrigued, sort of watching, studying the details of how this works and how does he enjoy success. So I'm bringing all this up to you because it just, one quick example that's fascinating to me is there's something that happened with Tesla. This is probably at the beginning, this is 20 years ago. And what that idea was is that there are people like me that enjoy performance. And I've been a car nut since I was like, 12 or 13 years old in terms of reading in Car and Driver about the Lamborghini Countach and all these great vehicles. And what I was amazed by is something very strange happened, which is that Tesla came out, and there's a mental perception of Tesla just being a golf cart, basically, with doors on it. And so it's great for you to categorize it as that. But then this issue came up of that 0 to 60 time of Tesla just crushing everything. So that is, the argument was, well, there's no pedigree, the cars don't look very good. There are all these different arguments one could make against what Tesla's up to. And a lot of them have fallen away. What's weird to me is how the argument seems to be switching over from Tesla's kind of a nightmare to, oh my gosh, we all have to do this. And I'm intrigued by the principle of physics that I noticed that I think is playing out here, which is, if you think about it, if a car can do 250 miles an hour, that's awesome. So what they've had to do is actually come up with specialty tracks where very wealthy people who can afford those cars at $500,000, $1 million are able to drive those cars full bore. Because as an auto rider, I have to tell you, I've driven a lot of cars, hundreds of vehicles, and written about them. And what I thought was weird was that the faster the car you have, the more capable it is, the less you can enjoy it almost, because having a supercar capable of 200 miles an hour running at 20 miles an hour between lights and things like that is almost painful, because there's almost no input that you put into the vehicle as you're doing those speeds. On the other hand, one of my fun things was the first time I went over 150 and I was rolling on this freeway. It was really cool because all of a sudden I knew the speed I was at, because instead of the lines being separate, they're just one solid line at 150 miles an hour. And then there are other changes as you go up from that. What I'm getting at here is the fact that if you look around America, unless you're very rural and you don't want to destroy your tires and rims, running at 100 miles an hour really doesn't fly well for long periods of time. So most of your enjoyment, I'd heard this when I first started interviewing, but most of the enjoyment of a great performing car is between first and second gear if you have a gearbox, because your speeds are slow enough that you're not going to get a ticket, but you can feel the rush of adrenaline that comes from that speed increase as you go between those gears, and you are able to mash it in that second gear, and you run from 30 to 70 or heading towards it. That roller coaster rush right there is sort of the best. I'm running you through this because one of the principles of physics that's kind of lurking here that's affecting the auto business is everything that can be added to an ICE vehicle right now for performance, causes the vehicle to perform above 80 miles an hour, better than Tesla, etc. The problem is that 90% or 95% of people's driving is below 80 miles an hour. So all of that car enjoyment that you would get, particularly in second gear, is where Tesla and electric has a huge advantage. So it's been interesting for me to watch over the last few years as the large automakers couldn't do this. So therefore, they're in this weird mode of, we can't do that, so let's not publicize how important that performance band is that people like Tesla are able to do. So we've entered this very weird realm where people are paying huge amounts of money for incrementally more performance, and they're finding that most of the ways in which you'd use that power are out of their band of use. And, I could go on with this, and I'll look forward to whether you guys want to hear more about this, but one of my favorite rappers is a guy, Big Pun is the rapper, but he has a partner of his who's he's like 6'4". If he was in shape, he'd be about 220, but in reality, this guy is 6'4", 250-ish, maybe more. And he bought a Ferrari, and the problem he had was that he loved the car, but he had to have his wife drive the car out so he could just look at it because he can't drive it. And so I thought this was interesting because he, at his size, he ended up, I saw some stuff where he's driving a Rolls Royce as his car or big SUVs, but he can actually fit inside a Model X, and he can outperform the Ferrari he can't get into. So there's an example of physics where there are a lot of big people who love cars and they have the money, but they can't get in those cars. And let's not even talk about big people with a back problem and their ability to deal with a car the size of the Model X for them to get in and out of versus a very small performance sports car. They can afford it, they want to be in it, but their body size doesn't fit it. Simple physics going on. So what I'm hunting for in this dialogue is just the fact that there's a change going on out there. Folks like Tesla are delivering this change, and people are benefiting greatly, and more people with money are catching on to the value proposition that Tesla offers to all these groups that are being underserved by the sort of big entities. So, any rate, what all this says is Tesla, if you're riding the longer curve, you might find that the short curve of can I make money on the options over the next 3 days, you might get burnt and lose money, but there's this longer theme showing up and more ways in which Tesla is showing leadership in this longer theme. And it's interesting to watch the market start to come and embrace all that Tesla's doing. At any rate, this is Greg. Wanted to thank you for joining us. It's supposed to be a Trade Blast, not a longer show, so I apologize for the extended. Look forward to your comments. Don't forget 25 leg lifts. I'm going to go do mine. No more than once a week fried foods. I'm done once Popeyes this week. Also wanted to encourage you to, this is horrible, but I just watched an Elon tape and I was cracking up because he made the comment that he generally doesn't watch day-to-day news. He'll watch movies when he's jogging on the treadmill, and he makes a point of reading scientific journals and learning more about innovation because he finds that how the news manages people's lives is totally counterproductive. So this kind of fits into our general theme of where do we want to put our energy and time into and what's of value. So at any rate, again, thanks for joining us. Tschüss, macht's gut, au revoir, lehitraot, choda hafez. In Jamaica, we say, enough respect, walk good man. Thanks and have a great day. Happy trading. And I think next week will be a lot nicer than this one with all these new developments that are coming in, be it Battery Day or the opening of the factory. Thanks again. Have a good day. Bye for now.